Welcome to our webinar on the tax benefits for homeowners. My name is David Sanchez. I'm a realtor. I live in Long Beach, focus in Long Beach and the LA and OC area. And then I am lucky enough to have Garrett Steiner. He is a CPA. And Garrett, if you could tell us a little bit about yourself.
As David said, my name is Garrett Steiner. I am a CPA, which is a certified public accountant, which essentially means that I am licensed by the state of California, allowing me to prepare and people in tax matters. A couple years back, when he actually sold me my first home, and since then he's come to me occasionally with tax either on his own tax situation or his clients. And we thought, hey, what better idea than to give a little bit of a info on some of the tax issues that first-time home buyers run into, have the information that they need when it comes time to file their taxes.
Yeah, Eric's great, and he's helped me out with a lot of different things. And he's good. If you just need, just ask him a question. He's good with that. Of course, he would love to help you further than that. He's also a good teacher too, which you're going to see in when he goes through some of these slides. And just so you know, he's mainly going to be the one driving on this one. I'll be in the back seat because I know that I have my own lane to swim in. I'm good at selling houses, but I'm not a tax professional by any means. I have to rely on someone, and I need people on my side that help me get the best tax benefits I can. So that's why, again, I wanted to bring Garrett on this call. You could take it away, Garrett.
So today, we're going to be talking about a couple different types of tax benefits for home buyers. The purpose of this call is primarily to discuss the tax issues as it relates to people who own and live in their homes. This call is not for people who are looking to rent out their homes, and we're really not going to go into a tremendous amount of detail in terms of the calculations and the numbers on these things. It's really high level and just a informal info session. So the first type of tax benefit we're going to talk about are deductions. The next one is tax credits. And the third one are gain exclusions. So let's jump into tax deductions. Now, when you buy a home, there are a couple deductions that become available to you that are otherwise not typically available to people who don't own a home. The first one is property taxes. I live in California. David lives in California. Anyone who lives in California can tell you that property taxes are pretty high. As home values continue to raise, the property taxes also go along with that. And one benefit that homeowners have is that you can now start to deduct your property taxes when you file your tax returns. The next big one, especially nowadays with interest rates being a little higher than maybe they've been in the past couple of years, is your mortgage interest. So although maybe you didn't get that sweet sub 3% rate that your friends and family who purchased 5-10 years ago might have, you do get to deduct the mortgage interest. Additionally, if you decide that you want to buy down your rate, the points on that loan are also a deductible portion of that mortgage interest that you can look at. And then as an aside, if as a homeowner you decide down the road, oh, I want to take out a home equity line against my home and redo the kitchen or redo the bathroom, the interest on those loans is also something you can look at deducting. Now, let's talk about how this really works. So prior to home ownership, most people are going to take the standard deduction. Now, what does that mean? So per the tax law, everyone that files a tax return can go down one of two paths. They can either take the standard deduction or they can do what's referred to as itemizing their deductions. So what does that mean? The standard deduction is a flat rate that you are allowed to deduct from your income in determining how much tax you're going to pay. For 2024, for reference, if you're married filing joint, that standard deduction is $29,200, which is pretty generous. Now, the reason that most people won't begin itemizing their deductions until they own a home is because really you only want to take the biggest deduction that you can. And for a lot of people, a $29,200 standard deduction is going to be more than if they were to itemize. Now, let's talk about itemizing deductions. What is considered an itemized deduction? For one, you have medical expenses. You have your state taxes, which includes the property taxes that we talked about. We have mortgage interest, and then we have charitable contributions. Now, you might be asking yourself, this is a discussion about homeownership. Why are we talking about medical expenses and charitable contributions? Because the four things that I listed there are all considered itemized deductions. Now, you may have prepared your taxes in the past and said, oh, I gave some close to goodwill, or I spent quite a bit on a procedure, and you might not have actually received any tax benefit for that. Well, why is that? It's because total the charity and medical that you might have had might not have been more than $29,200. That's when their itemized deductions really balloon and you start looking at potentially itemizing. For example, if you have a mortgage in 2024 and you have a rate that you wish was a lot lower, you're probably going to be paying tens of thousands of dollars in mortgage interest, especially in the first couple of years. So I want to direct your attention to this little graph on the side where we illustrate the numbers and talk about exactly what it might look like between a standard deduction item. So in our standard deduction column, this is for everybody that's married. They just get $29,200 to reduce their taxable income. No questions asked. You don't need to do anything for this. Everyone just gets it. On the flip side, though, if you take that standard deduction, you don't get to deduct things like medical expenses, property taxes, mortgage interest, and charitable contributions. So your total deduction is going to be limited to that $29,200 standard deduction amount. Now, let's look at our scenario B here for itemized deductions. In this scenario, you don't get to take that $29,200 standard deduction. Instead, you get to take the medical expenses, property taxes, mortgage interest, and charity. And in this scenario, that total deduction is $41,100. Now, once you own a home, in this scenario, oh, my deduction is going to be $10,000 higher, $11,000 higher than just taking the standard deduction. And the tax savings on that are larger than if you had not owned the home and taken these itemized deductions. So ultimately, once you own a home and you have this mortgage interest and property taxes, it becomes really important for people to keep their contributions and keep track of their medical expenses, because now these suddenly come into play and you can receive tax benefits for having these things. Even though they're not related to home ownership is often the catalyst that lets you start looking at these other things. Now, let's talk about some tax credits. Now, we love tax credits because while a tax deduction might reduce your income, a tax credit reduces your tax. If we were going to say $1,000 deduction is going to reduce your income by 1,000, but a tax credit is going to reduce your taxes by what are some tax credits that might be available to people who are now homeowners? The first and biggest one is what's considered clean energy improvements. The largest of this is solar panels. Now, solar panels are great. One, they're great for the environment. We love them, but the tax code actually treats them. Let's say you go out and solar panels and you spend, $10,000 on these solar panels. That's the cost of buying the actual panels themselves, the cost of installation, some ancillary costs just to get them onto your house. Percent of the money that you spend there, you get to take as a tax credit, which can reduce the amount that you have to pay or increase your refund at tax time tremendously. Now, another one that's increasing in popularity that falls under this umbrella is an EV charging station. Lots of people are buying electric cars nowadays, but what happens is oftentimes people's homes are not retrofitted to support the voltage or the wattage that you need to charge your car. If you install one of these EV charging stations in your home, this is actually also eligible for a tax credit, which is 30% of the cost of installation. However, it is limited to $1,000 total. So if you spent, God forbid, $10,000 to install an EV charging station, you're still only going to be limited to an overall tax credit of $1,000. However, if you're doing these things, it's important to keep track of these numbers, because come tax filing time, it's going to save you quite a bit of money. Now, let's talk about some smaller ones that are still relevant. The second bucket here is what we refer to as the energy efficient improvements. These are things like doors, windows, water heaters, things that meet specific standards that are set forth by the government, which we're not going to go into in detail. However, just know that if you're planning on getting new double pane windows that are advertised as being energy efficient because they reheat and all these things may qualify for some of these tax credits. This specific bucket is 10% of the cost of installation, up to $500. So it's not nearly as large as solar panels or even an electric vehicle charging station, but there is still something there. And if you're planning on making these improvements already, going forward and looking for something that might meet this qualification might end up saving you money because you'd be getting this tax credit on the back end when you file your taxes. Now, let's talk about the last one here. And this is what we refer to as a tax exclusion for homeowners. Now, this meeting is primarily for people who have just purchased their home for the first time. However, one day down the road, you might be looking at selling that home. And it's important to know, what does that look like if I decide to sell this home? Am I going to have to pay a bunch of taxes? And fortunately, there are tax provisions available to help homeowners not pay a tremendous amount of tax when they sell their homes. Let's talk about what that means. If a home is your primary residence and you've lived there the last 5 years, then you are eligible for up to $500,000 of that gain on the sale of the home to be excluded from your income if you're married filing joint. If you're single, this amount is $250,000. Now, let's talk about what that looks like in practice. Let's say it's 2024 and you're looking to sell your home that you purchased 10 years ago. In this example, let's just say that you originally purchased that home for $500,000 and now it's worth $1.1 million. Tremendous growth on the home. It's appreciated by 600. Now, when you sell this home for $1.1 million, the way that the calculations work is, one, you get to deduct your selling expenses, the commissions, the other expenses that go into selling. Then we get to take out whatever we paid for the home. And normally we would be left with a gain, a $500,000 taxable gain that you would then be on the hook for paying taxes on. However, if the home is your primary residence, there 2 of the last 5 years, that $500,000 gain is completely wiped out. And you have now just sold a home for $1.1 million, but you're not going to pay any tax on it because of this. It's a tremendous benefit. Lots of planning goes into this. People that they move back into their homes, maybe they had used it for a rental for a number of years and they want to take advantage of this exclusion. So they end up moving back into their homes just to completely wipe out this gain. So tremendous benefit, definitely something to look at when you sell your home. A tax preparer is going to be able to help you, assist you with this and make sure that you're paying as little tax as you're able to. Now, that was the conclusion of the kind of info session around the taxes. Obviously, there's way more we could go into talking about with taxes. And so on that note, I do want to bring up that although this info session was directed towards first-time homebuyers, we are going to be having an info session for people who are looking at exploring the tax issues revolving around rental properties and renting out their homes. And while that event is not on this slide, I will just say currently it is scheduled for September 8th. That is a Sunday at 10 a.m. So if you're interested in learning more about what it means to rent out your home and what the tax rules and deductions you're able to take, please join us for that. It's gonna be great.
Yes, and we got that feedback from previous calls that we've done where they had a lot of questions on Airbnbs and rental properties. And then that's when Garrett and I thought, you know what, let's just do one because there's a lot of questions on this. And just in general, people ask me about that stuff all the time. Garrett's great for that. We might as well have someone that's literally their job to do that. So we have him on, and I want to make sure I'm doing events that everyone else wants to. If you have anything in particular you want, just let me know and we could talk about that. These are a couple coming up. So if you haven't purchased a home yet, this could be a really good one. There's a $25,000 home buying grant for Long Beach residents. If you live in Long Beach, California, then you could potentially qualify. So we could talk about that if you have any questions. And then, of course, you could join the call. And then also we have a top tips for first-time home buyers. I'll walk everyone through the process of what it's like to purchase a home. And I know most people on the call today, they already own a home, but if you don't, or anyone that you know that this might benefit them, then feel free to forward that along. And I think that wraps us up. This is my info. This is a good page to take a screenshot or a photo of, and you have my info on here. And then if you go on Instagram at all, I also post a lot of informational stuff on Instagram. Really, it's a gamut of things. But feel free to join me on there. I think that is a good place to get a snippet of what it's like to purchase a home. I go over a lot of tips. and a lot of people find that helpful. So feel free to do that. And then you got my phone number here. Garrett, you also have his number. And also, just so I know, Garrett, so you are currently you're taking clients currently, correct?
Correct. Yeah, I also want to just put out there that if you have small questions, feel free, give me a call, shoot me an email. I'm not going to send you an invoice for a 15-minute call with a quick question. If the project ends up being something that we can work on together, we can talk about that. But I'm happy to answer brief questions that people might have.
Yeah, and that's been really helpful. I've had a lot of clients that have done that, and I greatly appreciate it. And I so much so that I use you now, and you're great, and you're very fair because I've used a few different CPAs in the past, and I will say you're very fair with your rates, and I'm very happy. Thank you for that.